This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Oil gains and U.S. stock futures slip as the U.S. launches a second day of strikes on Iran. The attacks coming after President Trump said he considered the ceasefire deal was over, threatening fresh disruption in the Strait of Hormuz. Minutes of the first Fed meeting under Chairman Kevin Warsh show several officials saw the case for a June rate hike as inflation concerns grow. Indian Prime Minister Narendra Modi arrives in Australia for talks with Anthony Albanese on defense and energy deals. And Bain Capital tells me it sold its entire stake in flash memory chip maker Kioxia. We hear from managing partner David Gross later this hour.
And I'm Paul Allen in Sydney. Let's take a look at the setup for trading across Asia. Of course, a lot of the action was in oil over the night. So let's take a look at Brent price right now. 78.02 at the moment. We did briefly touch $80 a barrel. This is after the US extended its attacks against Iran to further degrade Iran's ability to disrupt traffic in the Strait of Hormuz. President Trump saying he doesn't think the conflict will start again. There's talk of potentially resuming the blockade. Iran, meanwhile, saying it stands with its finger on the trigger. So a lot of nerves around the energy market at the moment. Against that backdrop, we are seeing gold easing off a little here in Australia. Meanwhile, we're setting up for a soft open off about 0.5%. We'll keep an eye on miners as well. Metals lower on growth concerns, of course, linked to the cost of energy and the inflationary impact of rising oil prices as well. Let's take a look at what the session was like in the US. We had the Dow sharply lower, although energy stocks, chip makers, continued to perform pretty well there. S&P futures off 0.1% at the moment. Nikkei futures are flat at the moment. We'll have a little bit of data out of Japan today with machine tool orders for June. Japan's also going to sell 5-year bonds today as well. Now take a look at the Korean won. Normally we would have the yen there, but all the action is in Korea's currency at the moment. The won extending its gains. We have a South Korean official saying won weakness is temporary. Obviously, the trend is his friend. Right, let's get to the top story. Iranian state media saying the US has struck a military base in Bushehr, home to Iran's only nuclear power plant. President Trump posted on Truth Social that the latest attacks were retribution for Iranian strikes on commercial vessels, warning that if Iran attacks again, it's going to get much worse. Bloomberg Washington and White House correspondent Jeff Mason joins us now with more. So, Jeff, the president is saying, look, the war's not restarting, but is the ceasefire dead? What's the nuance here?
I think your word there is spot on. Nuance. What is the nuance? I think it's very difficult to figure that out. I mean, the president has given conflicting messages today, which, let's be honest, is sort of been his MO for the last several months about the Iran war, and that manifested in his comments today. He said at one point in the afternoon that he thought the ceasefire was over. And that he didn't want a deal, which is the opposite of what he's been saying for weeks, if not months. And then later, when he was pressed on it, he said he did not think that the conflict was going to start up again. One might conclude that that means not start up again in full force. And that's underscored a little bit by the Truth Social post that you just played in terms of it being retribution for yesterday's bombing, and it will get much worse if it happens again. You might read from that these strikes will be more limited, and that if Iran were to strike again, then the U.S. would do more. But again, it is hard to parse because the president did give conflicting messages.
And most consequential to the world would be what happens to the Strait of Hormuz and oil shipments, right? What do we know at this point?
Also a good question, and that's one of the biggest political and economic challenges for President Trump. The political downside and economic downside of having launched this war in the first place is that it woke up Iran to the fact that it has this superpower of being able to control that strait. And that was just not, even if it knew that, it wasn't acting on that before this war, and now it is acting on it. And that has absolutely been the president's biggest challenge, is to essentially try to put the genie back into the bottle. I don't have a new update on what it means for the strait right now, right this minute, as a result of these strikes, but it certainly doesn't make it easier to get that open and to make it to put it back into the situation of allowing 20% of the world's oil to come through freely and without problems.
Jeff, Iran's also said that it stands ready to respond. In its words, finger on the trigger. You pointed out the Strait of Hormuz as one lever that it can pull. But of course, we saw during the conflict earlier this year that it does strike out at its neighbours as well, disrupting air travel. What is potentially on the menu in terms of responses from Iran?
Also a good question, and I think that is where the broader question of does this escalate or not lies. Will Iran leave it after these U.S. strikes, whether these strikes are limited, as we were discussing before, or will Iran then see this as another reason to escalate more? And to your question, certainly, if we look at past as prologue, what they did in the initial weeks of the onset of the war was to attack U.S. allies and try to attack U.S. assets in the region, of which there are many. That's absolutely another option that they could choose if they wanted to continue in the path of escalation rather than de-escalation and returning to the negotiating table or returning to the terms of the MOU.
Yeah, exactly. Where are the mediators right now? The likes of Pakistan, the likes of Qatar, and which sticking points still remain?
Well, I mean, which sticking points indeed? It's basically been thrown out. So I don't have an answer to that. I suspect U.S. officials and even Iranian officials don't have an answer to that. They had set a 60-day timeline. They weren't even close to getting there yet. They had, the rest of July and August to try to get to a broader agreement, specifically on the nuclear program, but also on the details related to the Strait of Hormuz. But all of that was predicated on the fact that the fighting would stop and that the fighting had stopped. And now it's started up again. So I would say a broad answer to your very reasonable question is it's all a sticking point. Every single thing is a sticking point until they can get the ceasefire back into place. And that is the big question right now.
Bloomberg's Washington and White House correspondent Jeff Mason, as we continue to watch oil prices right now rising in the Asia session, the resumption of those U.S. strikes on Iran overshadowing a second day of talks at the NATO summit in Turkey. Bloomberg's Anne-Marie Hordern sent this report from Ankara.
The truce between the United States and Iran was tested in Turkey, and the conflict overshadowed day 2 of the NATO summit. We went from the president earlier in the morning saying the ceasefire was over to saying that he doesn't think it's really going to start again when asked about, is this a resumption of war? What we have, though, hours after the president left Ankara, is fresh strikes on Iran from the U.S. military. CENTCOM said this in a statement. At the direction of the commander-in-chief, U.S. Central Command forces have started conducting additional strikes against Iran to further degrade their ability to threaten freedom of navigation in the Strait of Hormuz. While attending the NATO summit, the president also threatened to resume a blockade of Iranian ports and also threatened more escalation, potentially going after Iranian desalination and power plants. Now, this obviously leaves the Iranian talks in limbo. The president said negotiators can keep talking, but he thinks it's a waste of time. Anne-Marie Hordern, Bloomberg News, Ankara, Turkey.
And today in the Japanese trading session, we'll also keep an eye on shares of Kioxia when trading starts in about an hour. That's after Bain Capital told Bloomberg that it sold its entire stake in the flash memory chip maker. The exit follows months of winding down its position from about 44% in December to around 14% in mid-June. We'll hear more about the move from managing partner David Gross later this hour.
We wound down that stake.
How much has that helped in opening doors across Japan?
Yeah, I mean, I think it's been really important for the industry and for us because, again, this was a crown jewel of one of the top, kind of technology-driven companies and conglomerates with an amazing history, Toshiba. A lot of parties and stakeholders were involved, so there were a lot of eyes on whether this was going to work, and it's worked spectacularly for really, I'd say, all the stakeholders involved.
Still to come, amid the flare-up in geopolitical risk, investors hit the pause button on the great rotation trade. More on how that will play into the Asian trade next. This is Bloomberg.
Fears of a US-Iran war escalation dominating headlines this hour, but volatility in the AI trade is also in firm focus. Traders also watching inflation concerns after the minutes of the first Fed meeting under new chairman Kevin Walsh. So let's get more on the market setup with Bloomberg reporter Anthony Stevens in Hong Kong. Also joining us, our Fed and economy reporter Enda Curran and Garfield Reynolds here in Sydney, who leads our Markets Live Asia coverage. Anthony, I want to start with you. You know, the energy prices began to tick up during the US session. Can you talk us through some of the reaction that we saw, how that might play through to Asia trade today?
It was a very interesting session. You had the markets kind of open on the lows as, you know, this oil crisis comes back to the fore, and there were some concerns around inflation. But then people went back to the old Iran playbook of going to the semiconductor and the AI trade as the one place that can outgrow any inflation concerns. And you saw semiconductors stage quite a decent rally intraday. This was followed by the Kospi futures that had a huge 6% intraday swing back to positive. So they're indicating quite strongly this morning, and this points to the fact that the rotation trade that had been hurting the semiconductor trade for a while now has reversed very sharply, with banks and industrials getting hurt by the kind of uptick in violence in Iran. The semiconductor trade looks a lot cleaner as a way to play kind of the back half of the year. So this back and forth between the rest of the economy and the semiconductor trade continues to completely dominate the equity market. Correlation between the Dow Jones Industrial Average and the S&P and the SOX in the short term has turned negative, which is a rather extraordinary situation. And in Asia, we are left with leads that are quite positive for the tech space, but look quite muted to negative for everything that is not tech. It was very interesting to see, for example, India trade sharply weaker yesterday as well. So that's the setup for us now.
And it seems that the inflation narrative is back in the spotlight, with markets now considering that rate hike risk. What did we learn from the FOMC minutes?
So we had a few FOMC policymakers saying that conditions are probably there right now for a rate hike. But despite that, they went along with the overall decision in June to keep rates steady. I think the tone for the minutes in there today, Shery, really was a kind of a tilt towards inflation, and not just inflation linked to the oil story, but more broad-based inflation, still referencing tariff inflation, lots of references to AI-driven demand, and how, of course, that's spilling over into driving up prices in the technology sector. So quite broad-based concerns on the prices side. We also had several scenarios kind of baked in towards the end of the minutes today, where the FOMC participants said, on the one hand, look, if inflation comes off the boil, starts heading back towards our target, there's a scenario whereby we could be cutting rates at some point. But equally, they also said if inflation stays where it is now or even higher, then there's going to be a case to raise rates. So it's kind of a either or, but the biggest takeaway, I think, for the minutes overall was ongoing concern over inflation, and the news from Iran probably won't ease those concerns in the near term.
Yeah, we didn't have a huge movement in the dollar off the back of that, but speaking of currencies, might be a good time to talk to you, Garfield, because, you know, we just displaced the yen on our usual market board, but the Korean won showing some strength. It's about to push through the 1500 level. What's driving this? How rapidly will authorities allow this to strengthen?
Oh, I think the authorities would be quite happy to let it run a fair way, because it had got very low and there had been plenty of concerns, both about, you know, what that means for the general populace, but more importantly about the impact on inflation and the likelihood that that was going to mean the Bank of Korea would need to raise rates sooner rather than later. So that's one. Your driver of it is what the government is doing. It's been selling its FX reserves and buying won to support the currency, though it does it with a softer touch than the way Japan usually does. Meantime, a very important part of what's helped the won is the coming down to earth for Samsung and Hynix and the Kospi more generally, but especially those two. That's meant that foreigners are now buying Korean shares rather than selling them as they had been. They'd sold more than $100 billion year to date at one stage, and that's been a major burden for the won. Some of that selling was precisely forced by how high Samsung and Hynix had got, which meant that they were breaching portfolio investors limits on stock concentration, so they were being forced to pull some money out precisely because of that. That burden has gone away for the won, so it's actually been a pretty good moment for the Korean authorities to support their currency.
And Anthony, we're seeing the latest lines drop on AI model maker Zhipu in China. Now, the placement of their shares up to 19,780,000 new H shares at 1,588 Hong Kong dollars each. A lot of news around in the Chinese tech sector as we're seeing those flows now from Korea to China, especially in this sector. Could that be sustainable?
Well, you're getting flow meeting technology progress in China in a really nice kind of way. That Zhipu block is extraordinary in the sense of its scale compared to the IPO and the tightness of the ECM price versus the implied volatility of the stock. So this is a very volatile stock where a huge placement has been priced very tight. So that's quite a positive signal, and it kind of follows a general trend of placements in Hong Kong in very volatile stocks that have come in large size and have been priced tight and have traded quite well. So in terms of market reaction to this space, it's really quite strong. Now, in terms of the technological innovation news flow, we continue to see Chinese models make progress. They move up the technology curve. Even Zhipu's competitor Minimax came out with a new model, has released details of a new model overnight. We saw pretty decent success from Tencent's new model. So there's a lot of progress on the model side of things. While they still don't have top-of-the-line semiconductors, it appears clear that China's open source approach to AI development is working out for them.
Garfield, I want to pick up on a point you were making a moment ago about the Korean won, because we're seeing Korea also now selling euro-denominated bonds, about 1.7 billion, if I'm not wrong, in euros. Is this more in pursuit of market stability as well, and can we expect to see more of it? Is it just the start?
Well, it actually gets them pretty close to the limit of what they normally sell during the course of the year in order to raise money for their FX reserves. However, normally in the second half, they wait for the fourth quarter to do this, so the fact that they've gone so early, that's, I think, a signal more than anything else about how much they have been spending, but it also, it tells investors they've got the firepower to come in again. And so when we had overnight Korean authorities warning investors that they remain eager to monitor the won and to avoid unnecessary speculation is usually the line. That's them telling the market, you behave yourselves. And of course, we have to remember, it's especially important for them right now because they just started allowing 24-hour trading of the won. So the last thing they want is to see that 24-hour trading turn into an opportunity for speculators or for fundamental traders, whoever it might be, to drive the won down rapidly. That would look very poor from the Korean authorities' point of view, especially if you remember they went off 24-hour trading after the Asian financial crisis saw the Korean currency crash down quite spectacularly. So that's them saying we've got the will and we have the firepower to make sure that the won doesn't reverse sharply.
And we have seen a little bit more stability for the U.S. dollar after some strength. We have plenty of Treasury auctions also to watch when it comes to the bond space in the U.S. What will be important for markets when it comes to economic data now from here on out to try to gauge where the Fed will go from here under Kevin Warsh?
So we're counting down to the July meeting now in a couple of weeks, Shery. I think two main things. Number one, we have US inflation data next week. The headline numbers actually may even come in negative because they will be reflecting the big dip in oil prices compared to the previous few months on the back of the US-Iran war. But it won't just be the inflation story. It will also be now, where does the Iran story go from here? I mean, is this a temporary resumption of hostilities and both sides continue the negotiations? Or do we get back into a cycle of hostilities and, of course, with knock-on effects on oil prices? And then that will have a flow-through effect for the whole US inflation story, too. It's not that the Fed are necessarily close to hiking interest rates. It's just that the longer this energy story persists, at the time that we have the tariff spillover still continuing, and of course the AI boom spillover carrying on in the economy too, all of that at the very least will keep the Fed on hold into the back end of the year. And remember, that in itself is already very different compared to what markets were forecasting only a few months ago when traders were still betting on Fed rate cuts. So it's all about the inflation data next week and how the Iran story plays out as we head into that Fed meeting later this month.
Bloomberg's Enda Curran, Anthony Stevens, and also Garfield Reynolds. It was really great talking to you all in this very wide-ranging conversation about the markets and the economy, as we have plenty more to come. This is Bloomberg.
Let's get the latest now from the corporate front. Bloomberg sources say SK Hynix's US listing is more than 7 times oversubscribed. We're told the ADR sale has attracted demand from institutional investors, including global long-only funds and sovereign wealth funds. Bloomberg calculations show the offering could raise more than $24 billion, ranking it among the largest ever US debuts for a foreign company. Apple supplier Luxshare is set to begin trading in Hong Kong after raising $3.1 billion in the city's biggest listing this year. The Shenzhen-based company assembles products such as iPhones and AirPods. It sold shares at just over 63 Hong Kong dollars each, the top end of the offering range. Hong Kong equity fundraising has been booming this year, driven by a wave of Chinese technology companies. And Chinese chipmaker CXMT will open its IPO subscription on the STAR market on July 16. According to a prospectus filed with the Shanghai Stock Exchange, the plan is to issue nearly 6.7 billion shares with a preliminary price inquiry on July 13. China's homegrown chipmakers have drawn fervent investor interest due to an unprecedented memory shortage driven by demand from hyperscalers. Shery.
Yeah, we are seeing that rotation perhaps out of Korean AI tech names, especially when it comes to hardware, into more cheaper Chinese names. We did get the latest from Jipu when it comes to the AI model maker trying to raise about $4 billion from a share sale. They're placing around 19,780,000 new H shares, now at 1,588 Hong Kong dollars each. So we'll continue to watch the markets as we have seen those shares of Jipu soaring when it comes to that Hong Kong listing in January, around 1,500%. But take a look at the broader markets right now, because we might see some volatility when it comes to the broader tech sector. We had this dip buying and de-risking when it comes to the Philadelphia Semiconductor Index. So a lot of volatility in the chip space. The dollar index hasn't really done much. We have also not done much when it comes to broader U.S. stock markets. That AI rotation continues, but at the same time, of course, we have that rate hike risk back into the markets as we have those geopolitical tensions around Iran. Futures at the moment under a little bit of pressure. This is Bloomberg. Hormuz returns as one of the key macro drivers in the market session today. We have seen now President Trump say that the ceasefire is over, the U.S. carrying out its second day of airstrikes against Iran into sites, Paul, that might threaten shipping. But it's really about the governance. It's really about what happens to the Strait of Hormuz, especially when it comes to those oil shipments. So we have seen, not surprising, now oil prices continue to rally, and Brent at one point even topping $80 a barrel. We'll have the open in the Asia session in about half an hour. But oil prices had sunk about 30% or so in the second quarter. We were already talking about glut issues, but we're back at this point where ship owners might feel reluctant to actually use this corridor and this waterway in the Strait of Hormuz.
Yes, the president saying that, the ceasefire is over, but also that the war is not restarting. So We'll leave it to the individuals to figure out what they think that means. But yeah, to your point on oil, it did go up, and that's having an impact on some other risk assets as well. Tech behaving as something of a haven during the US session, but we're seeing S&P futures off by a little bit more than 1/10 of 1% at the moment. Nikkei futures, though, poised for a bit of a lift to the upside, up about 1%. Be an interesting day in Japan, actually. We brushed over the yen earlier, but it's still very weak, 162.58. This rising oil price may push the yen towards 163, which starts raising those usual conversations about will we, won't we see intervention. Also got a 5-year bond auction in Japan later on today. That might draw some interest due to the shorter dating of those securities. Right, let's get to news here in Australia now. Indian Prime Minister Narendra Modi is in Melbourne for talks with his Australian counterpart Anthony Albanese. Now, the two leaders are expected to sign agreements on defence and energy before attending a rally for the Indian diaspora. Modi's on a diplomatic tour of the region, sealing defence and industrial deals with Indonesia, and then he heads to New Zealand later on Friday. Let's get some more now with Teesta Prakash, a research fellow at the Australia-India Institute. Teesta, thanks so much for joining us today. Just want to get your view on what would qualify this as a successful trip for Narendra Modi. It's his third in a pretty short time frame. There's a focus on defence, security, critical minerals, supply chain resilience. But do we need to see some actual agreements and announcements and deals made, or just a statement of intent enough?
Thanks, Paul. I think this visit, given it's his third visit now to Australia, making him the most sort of visiting Indian Prime Minister to Australia, I think this visit isn't really about new agreements and new announcements, although I suppose there will be some on defence and trade. This visit in particular is about setting in institutionalization of the relationship, right, where it becomes resilient from sort of political cycles. So I think a successful visit is one that actually makes sure that, after the visit, the relationship carries on, as it were, without the push of the apex leadership. And also there is the big diaspora event that is taking place in Melbourne today. So it just shows that Australia's new identity as a multicultural nation, where the Indian diaspora is now the largest diaspora, outstripping the British diaspora as well. So it shows that there's a new form of connection between Australia and India.
Yeah, I want to get to that big stadium event a bit later, because it has become a regular feature of Narendra Modi visits to any country where there is a large Indian diaspora. But back to that question of intent, I mean, if we look back 12 years ago now, Australia and India signed a deal on uranium supply, and there's practically been none. Could that be about to change?
I think fundamentally, there is a costs issue, right, for uranium, and obviously India needs uranium. It's an energy-consuming country. It's got 1.4 billion people that have large energy needs. So uranium is definitely needed by India, and of course Australia is a large deposit of it. And not just uranium, right? It's about critical minerals. It's about lithium, galenium. So a lot of it sort of needed by, say, for example, India's EV industry, which is now booming. So there needs to be more negotiations on what a uranium deal would look like. Costs, shipping, all of that. But a large part of it forms, India and Australia signed an interim free trade agreement in 2022. But the talks for a fully fledged, free trade agreement, CECA as it is still, in negotiation stage. So a lot of that conversation will propel formally getting a full trade agreement that is a little bit on the slow burn. But I think this visit specifically is to make the momentum sort of, in full flow. He's meeting business leaders. There's a CEO forums happening on the bylines as well. So there's a lot more momentum on the trade side, because the defense and sort of the strategic side has been well established. So this time the push is really to get that full trade deal going.
Yeah, and of course the resurgence in hostilities in the Strait of Hormuz over the past 24 hours, a reminder of just how dependent India is on energy flows through that crucial waterway. What sort of discussions do you anticipate around energy security, and how does Australia stand in terms of being able to offer that support to India?
I I think there is now a clear understanding of the fact that there is now, whatever happens in the Strait of Hormuz directly impacts Australia, India, and the rest of the Indo-Pacific, as it were. So I think the realization now is that we need a safe and secure sort of Indo-Pacific energy corridor. And that would require not just Australia and India bilateral conversations, but it will require Japan, Singapore, sort of other partners and allies of Australia to sort of come in and have a conversation about what this would mean in terms of energy transportation, energy storage, and energy consumption. So I think the talks are now, of course, the Chinese resurgence we've seen with, the ballistic missiles testing and the likes has always been present. But there is now also an understanding that the U.S. may not be as invested in this region. So with those two sort of strategic issues, how do we then move forward? And that's sort of, again, part of that larger sort of trade sort of talks and negotiations of what kind of energy exchanges can there be.
Well, there's going to be a bit of fun on this visit too, as you alluded to earlier. Prime Minister Modi is going to be visiting the Melbourne Cricket Ground, which I'm sure will be a highlight for him, and also a big stadium event in Melbourne tonight with 30,000 of the Indian diaspora attending. Going to be a similar event in New Zealand, where he's the first Prime Minister to visit in almost 40 years. Why does he do this? What's the political benefit for him? And also Anthony Albanese and New Zealand Prime Minister Christopher Luxon as well. Do they get a bit of reflected glory off these kinds of things?
I think for Modi, the Indian diaspora, I mean, he also had a diaspora event in Jakarta, in Indonesia. He sort of views the diaspora as a diplomatic asset. Right? For him, it's a sign of prestige. It's a sign of India's sort of global influence, as it were. So it acts as a soft power tool for sort of Indian foreign policy. Look, for the Australian side, it's very important. Victoria's now coming to elections soon, and it's a I'm not saying it's a total political sort of vote campaign, but it does add to the allure of voting for these politicians who have close ties to leaders that are leading your home country, because the diaspora, the Indian diaspora, as we pointed out earlier, is the largest diaspora in Australia now. So and they carry significant sort of economic weight, right? They're a very prosperous bunch. But there are risks involved in that, we shouldn't be instrumentalizing the diaspora. They should have their own agency. And, they shouldn't be seen as a sign of India's geopolitical messaging, nor should they be just seen as a tokenistic sort of cash cow or economic sort of vote bank for the Australian politicians, as it were. So, look, it's something that Narendra Modi will play up because it's a massive crowd. And it's a very prestigious sort of crowd as well, because for him to see such successful Indians who are now Australians or Australian Indians definitely adds to the wow factor of it all.
All right, Teesta Prakash, Research Fellow at the Australia-India Institute. Thank you. More ahead on the Asia Trade. This is Bloomberg.
Shares of flash memory chip maker Kioxia will be in focus today after Bain Capital told Bloomberg that it sold its entire stake in the company. The U.S. private equity firm logged record-setting returns on its 8-year-long bet on the memory operation spun out of Toshiba. Managing partner David Gross told us about where he sees the next investment opportunities emerging.
We're seeing it in carve-outs, in kind of the industrial landscape. Other interesting, hybrid opportunities, which might cross operating businesses with real estate. We recently did a large transaction with 7&I Holdings for York Holdings, which is a grocery-anchored retail environment that also has a lot of real estate requiring kind of both those skill sets. Healthcare is a really important area for Japan as it contends with an aging society. And we acquired Tanabe Pharmaceutical, which is one of the oldest pharmaceutical companies, and are bringing in some interesting technologies from outside Japan and also kind of rejuvenating their R&D pipeline in Japan. And that's a huge huge opportunity. We have our sights set on a number of businesses in the overall healthcare ecosystem where we have a lot of global experience.
Why am I not hearing anything around artificial intelligence, semis, especially given that Kioxia was your
We had a big one. We have a big one, of course. And digital infrastructure is, and everything around that, whether it's the application layer or it's the physical layer or the energy that will be part of that, is certainly an ongoing area of focus for sure.
How big was Kioxia? I mean, is it one of your biggest deals for Bain?
It was, and it was originally, roughly $18 billion transaction back in 2018 when we did the deal, and the market capitalization now is, close to $400 billion. So it is enormous, the largest market cap company in Japan. And as you may remember, that was a very important part of Toshiba when Toshiba was facing some struggles. And so carving that business out, sustaining its R&D capability was critical for Toshiba, it was critical for Kioxia, it was critical for Japan's participation in this new technology opportunity. And then when AI came along, we had spent a lot of time focusing the product pipeline on the hyperscalers. And that, at the time, there was not AI, but that was really the strategic area. We did a lot to shift resources into that, develop the right products, such that when the AI wave came along, we were in the right place at the right time, and then it was a huge source of growth.
Do you still have around 20% stake? I heard you guys were winding down.
We were winding down, yes.
I mean, given the...
We've wound down, yes.
Yeah, okay.
Yes.
So around how much are we talking about, and how much do you plan to keep?
We don't have a stake anymore in Kioxia.
When it comes to future investments, are you looking at similar areas right now when it comes to Kioxia, equipment, memory in Japan? Yeah, well, there's only really one big memory company in Japan, but there are a number of businesses that sit around that ecosystem, whether it's the semiconductor equipment that serves that industry, whether it's the energy systems that serve data centers, software and applications is an area where we're quite active. So Kioxia was a really important success story of building a great technology company, but also got us very embedded into the broader, new technology infrastructure. And the relationships we gained there, the knowledge we gained there is allowing us to generate some pretty interesting deal opportunities. I'm surprised that you don't have a stake in Kioxia anymore. I thought you had just wound down.
We have, yeah, we wound down that stake.
How much has that helped in opening doors across Japan? Yeah,
I mean, I think it's been really important for the industry and for us because, again, this was a crown jewel of one of the top, kind of technology-driven companies and conglomerates with an amazing history, Toshiba. A lot of parties and stakeholders were involved, so there were a lot of eyes on whether this was going to work, and it's worked spectacularly for really, I'd say, all the stakeholders involved. And so clearly it's lended additional credibility to private equity, to the pitch and the promise that we're saying that we can actually we take businesses that may have had some struggles and get them on a growth footing and really position them to be not just leaders in Japan, but global leaders in very critical industries for Japan. And so I think it gives a really big boost.
Other than Japan, what other markets across Asia do you find interesting right now?
Sure. Well, India is a big area of focus for us. We've seen really tremendous development of the economy that is accruing benefits in the technology area, in the financial services area, in the pharmaceuticals area, and all those areas we've been participating in. Australia and Korea are interesting markets, kind of have some similarities to Japan in terms of being developed markets, but areas of undermanagement or pockets of growth that we can invest behind. And we still are active in China. I think there's been a lot of discussion of China and the geopolitical pressure there. But we found China to be an investable market, particularly when it's integrated with the broader Southeast Asia market, and how you can have businesses that might need to reconfigure their supply chains to be balanced across China and Southeast Asia, maybe serving U.S. markets or maybe serving European markets. And so we've invested in some interesting businesses in biofuels and recyclable energy, in data centers, in high-tech areas like optical technology and such. Really good companies in China, but that are broader Pan-Asia businesses.
Bain Capital Managing Partner David Gross speaking to me about Kioxia. Another sector that we'll be watching today, the Japanese consumer sector. Retail giants Fast Retail and 7 & I Holdings reporting quarterly earnings today. Bloomberg senior editor Reed Stevenson joining me here in the Tokyo studio with more on this, and really a two different story when it comes to their performance and their appeal right now.
Indeed. I mean, when you look at both companies, both in the retail sector, different products, of course. For 7 & I, the convenience store business, I mean, they're still in the middle of a turnaround. They've got to shore up their Japan business and really do a lot more work in the U.S. Because, as you know, we've discussed before, they've got an IPO coming up. Now, they've delayed it already from the latter half of this year to sometime next year. We're not sure when, but really the focus by investors is going to be on, you know, how much progress they're making in both turning around Japan and really turning around the U.S. Now, for fast retailing, the theme really is going to be about their continued overseas expansion. You know, we've seen them really push into Europe, Asia, and especially the U.S. The mix is tilting toward, a revenue mix where it's really becoming an international company. But at the same time, they've managed to kind of keep margins pretty high, great cost control. And so really the question is whether they're going to upgrade their outlook or not.
The global macro trends affecting these two companies, right? Especially when it comes to those inflationary pressures as well, the traffic in 7-Eleven stores, do people buy as much Uniqlo shirts?
Yeah, well, again, it's a study in contrast, you know, for convenience stores, especially in the U.S., you know, when prices get high, people just don't shop at convenience stores that much. They tend to go to the supermarkets and buy things in bulk. And also gas prices come into it. A lot of them are gas stations, and high gas prices are going to mean that people are going to drive less and go less to the gas stations. Now, Uniqlo is interesting because it's always been sort of a deflationary play. And so in an environment where the prices are going up, you know, they're going to actually benefit, because even though they have moved into sort of more of a value proposition, whenever people need clothes and they think, okay, I've got to get something for a reasonable price, they're going to head straight to their local Uniqlo store. That's
so true. I think I'm always wearing one Uniqlo piece at a time. Reed Stevenson, great to have you with us. He's a Bloomberg senior editor and, of course, watching the retail sector and those big earnings today. This is Bloomberg. Welcome back. As Japan adjusts to persistently higher inflation trends, consumer-facing businesses are being forced into new territory, convincing shoppers to spend more. Eyewear maker JINS rose to prominence with its bargain glasses, but as Bloomberg's Reed Stevenson reports from Tokyo, it's now rethinking its strategy.
Japanese eyeglasses maker JINS has built a national brand on its quick, affordable, and all-inclusive services. Founded at the onset of deep deflation more than 2 decades ago, JINS now faces a dilemma many Japanese businesses are grappling with for the first time: sustained inflation. As prices rise across the economy, JINS has embarked on a delicate repositioning to capture shoppers as they become used to paying more for features and designs beyond the basics. At its recently opened Ginza store, the company tested the upper limits of what Japanese consumers will tolerate. 90,000 yen limited edition frames, or around $560. A 6-month supply sold out in 2.
People often talk about a polarization of customers, but I don't think it's a polarization. I think it's becoming multipolar. So while there are still differences in high and low incomes, I feel that more than that, it's becoming clearer where exactly people find value in a product or brand and why they buy it.
Its multi-level Shinjuku store with its own cafe is another sign of the brand's evolution from typically unassuming locations in train stations and local shopping centers. The strategic shift to capture demand across a wide range of price points still comes with risk. Real wages in Japan still lag behind price gains, and many local shoppers are still cost sensitive after decades of stagnation.
The cost of living, the rise in the price level over the past 5 years has been very significant. So I think even with inflation slowing at the margin, even with the government subsidies suppressing prices, households feel like the cost of living has gotten significantly higher, and I think there's still a lot of dissatisfaction around that.
But for JINS, the CEO says the key is figuring out how to create value that customers can, well, see.
So back in the day, the only things that had value were expensive things. But we've managed to imbue these products with value, even without a high price tag. I think that represents a democratization of value. That's why these kinds of products sell.
So far, it seems to be working. The company is posting record profit in sales, and customers appear to be willing to pay more for its frames and lenses. Now, JINS is setting its sights on expansion, with American customers its top priority.
After all, the US is the world's second largest market. I believe that succeeding in the US will change the way investors view JINS. And there's that desire to grow into a global brand, isn't there?
Other Japanese companies such as Daiso and Uniqlo have also been able to raise prices, while others have stuck to the cheaper is better model. It remains to be seen how sustained inflation will be and how much consumers will tolerate. But for now, what's clear is that price rises are changing behavior on both sides of the checkout counter. Reed Stevenson, Bloomberg, Tokyo.
I actually talk about the inflation pain in Japan, of course, also because of a historically weak yen, 40-year low against the US dollar. This is my new newsletter. It's monthly, Tokyo Dispatch. Do check it out. And also sign up at bloomberg.com/newsletters.
All right, markets open. South Korea and Japan here in Australia as well, and in just under 5 minutes. And take a look at the early price action. Well, yeah, SK Hynix has had a pretty wild ride over the past month, and that's going to continue today. Right now, up 8.5%. Looks like we're shaping up for a good day for Samsung Electronics as well. The tech trade largely immune to the volatility in the oil price. We'll have those market opens in Sydney, Seoul, and Tokyo next. This is Bloomberg.
This is Asia Trade. We're counting down to Asia's major market opens as we continue to watch the geopolitical tensions around Iran. Paul, we're now hearing that the U.S. is continuing a second day of airstrikes against Iran at a time when we're seeing a lot of volatility in the tech sector, dip buying and de-risking on and off when it comes to those semiconductor stocks.
Yeah, and a lot of uncertainty around the status of what's going on in the Strait of Hormuz. President Trump saying, look, the war isn't restarting, but at the same time, the ceasefire is over. So we're, yeah, all right, enough said about that. But it's going to be an interesting day on markets. Energy stocks likely to do pretty well. The tech sector shaping up pretty well in the pre-trade as well, Shery.
Yeah, that's a sector that we're watching here in the Japanese session, of course, especially since we've had the Philadelphia Semiconductor Index just fluctuating between gains and losses throughout the Wall Street session. We have seen a lot of pressure recently with the narrative around fears around artificial intelligence. You can see the Nikkei, which is more tech heavy, pointing to a little bit of upside right at the open, and the Japanese yen holding at that 162 level against the US dollar, still near those 40-year lows. Do watch out for JGBs. We had the 20-year yield rising to that 1996 high. We do have a 5-year auction again here in Japan. Fiscal risks, the weakness in the Japanese yen. Where is the BOJ going? All of these are considerations right now for the Japanese government space. Take a look at how South Korea is trading, because that was also interesting. We actually had the Korean government selling FX stabilization bonds in order to replenish their reserves given the weakness of the Korean won. And finally, we're seeing a little bit of strength and headed towards that 1500 level against the US dollar. The Kospi seeing some upside of more than 3% as we're seeing Samsung Electronics, SK Hynix also gaining ground. Of course, big stories around this week. Samsung's record profit, but also SK Hynix US listing as well, Paul.
Well, let's take a look at how the oil price is performing. Obviously, a very sharp focus at the moment. It did crack through $80 a barrel for Brent a little bit earlier. If we take a look at, it's pulled back a little bit since then, however, because, as I mentioned, a lot of confusion about the current status in the Strait of Hormuz. President Trump saying he doesn't think the conflict's going to start again, but at the same time, Iranian targets being struck in the region. And Iran, for its part, says it has its finger on the trigger. So that's causing a little bit of angst in the bond space, although yields on the 10-year unchanged, just a shade below 4.58%. The 2-year little changed at the moment, but the trend has been grinding slowly higher for now. Here in Australia, meanwhile, we've got the ASX currently a little bit softer. We're off to the tune of about 0.8%. We were expecting perhaps to see the metal sector coming under a little bit of pressure today. Generally some concerns here over growth and inflation and what that might mean. So we're seeing Northern Star Resources, West Africa Resources, some of those gold miners suffering a little. Rio Tinto off almost 5% at the moment. Right, for more on markets, let's get to our executive editor for Asia Markets, Paul Dobson. And Paul, what kind of reaction can we expect to see as the Iran conflict re-enters this sort of zone of uncertainty, implications for inflation and growth, and how might we be seeing that reflected?
Yeah, good morning, Paul. So I think that the key thing to watch in all this is obviously the oil price, but after that, the yields on government bonds around the world. I think that they've seemed to be more sensitive to the moves in the oil price than the equities market over the last 24 hours. And the reason for that is because the bond market had just started to get comfortable with the idea that, yes, we might have higher interest rates, but we don't necessarily need to see more hikes from here because the inflation outlook is coming back under control with cooler oil prices and energy outlook. So now we have the threat of higher oil prices again. We have the risk of higher yields. We have the potential for central banks like the Fed to start hiking earlier. The market moved to price a Fed hike back in for October. During trading yesterday, we had the 2-year yield very close to this year's highs again. And that has the potential to have knock-on effects as well. It can lift the dollar, and therefore it can weigh on other currencies around the world as well as those bond markets.
Yeah, we're seeing a little bit of upside for the Korean won, though. It seems authorities are trying their best in order to support the currency. But given, of course, the foreign investors continue to sell off in the equity space, how long will this last?
So I think that there's a couple of things that may just be tipping a little bit in the Korean won's favor right now, Shery. One, you do have the huge ADR sale by SK Hynix and the idea that it will be repatriating a lot of that cash over time in order to fund construction in South Korea. So it's not to fund a build out in the US. Therefore, it will be needing to convert dollars into Korean won. And I think the second thing is actually in yesterday's session, just towards the end, we saw a little bit of a hint of a return of foreign investors to South Korea. Remember that they'd been exiting not because they particularly hated their market or anything like that, but more because the price had gone so high that their the fund holdings that they had as a proportion of their overall was too big. It basically blew their mandate. So it was forced selling. So now that the prices have come back down again, potentially the weightings of Korea in their funds has come back down, so it gives them the opportunity to step back in if they like what they're seeing there. And with the sort of the cheaper valuations and the very positive enthusiasm for those SK Hynix ADRs, there's a couple of reasons for foreign institutions to be having another look, and that may in turn be helpful for the won.
Paul, you mentioned SK Hynix there. It's had a wild month, and it's rising again today. But what's the broader direction of travel for SK Hynix and these big tech names more generally?
I think it's difficult to discern entirely just by looking at those South Korean names because of the humongous amounts of volatility that we've seen. We have a story out today that looks at the trading volumes of Samsung, SK Hynix, and those related leveraged single stock ETFs, which is now amounting to something like 70% of all of the trading that's going on in South Korea's market. So it creates an extremely volatile picture. I think that the market view, of course, of AI is still incredibly optimistic over the long run, provided that the people can afford all of that build out. We're still going through these big technological changes. It's still going to require a large amount of data center build out. It's still going to keep strong demand for the chips from Samsung, SK Hynix, and peers as well. And their valuations still are relatively cheap. I think the fear is that, this is quite a cyclical industry by historical precedent, and therefore people don't want to see them build out so far, and then for demand for their products to drop off in 3 or 4 years and leave them with a huge amount of overcapacity. That's the sort of long-term nagging doubt. But at the moment, if they're continuing to see extremely strong demand for their products, if they're continuing to raise prices, then the companies can continue to look fairly robust for medium-term investors.
All right, Executive Editor for Asia Markets, Paul Dobson there. Now, the US military says it's launched strikes on Iran for a second straight day, escalating tensions and putting a fragile ceasefire under further strain. Iranian state media reports say Tehran is preparing to launch large-scale retaliatory operations against US bases. Bloomberg editor Michael Heath joins us now with the latest. Mike, President Trump said earlier that the war's not restarting. This looks an awful lot like the war restarting. Where are we?
It does, Paul. I think to some extent what we're seeing is them trying to target the equipment that's being used to attack tankers and ships that are going through Hormuz. The logic of restarting the entire war, how you think that bombing, more bombing will achieve something that 2 months of bombing didn't achieve, it's hard to reconcile there. So in a sense, as you mentioned in your introduction, we are in this sort of zone of uncertainty where we're not at peace, we're not at war, skirmishing will continue to happen. And there's quite a lot of division, it seems, on the Iranian side too about this. On social media, there's been some clips showing the president of Iran and the foreign minister being attacked by hardliners during the funeral of the supreme leader, which sort of just speaks to that division between the more religious, more hardline groups, and it's the IRGC who's obviously firing at the tankers. So a lot of uncertainty, and I guess that the US is trying to see whether it can suppress some of that fire and just keep ships moving through. But it's a real war of wills there in terms of who controls that strait and the movement of ships through it.
When Iran talks about retaliatory action, it's important to remember a lot of those US assets are in neighbouring countries dotted around the Persian Gulf. So is that something we're going to see again, and could it have that knock-on effect to disruption of air travel and disruption of oil flows as well?
Yeah, I mean, the short answer is probably. The difficulty is that they do want to target these bases, but as we've seen, they hit airports. There's occasions where, the civilian infrastructure comes under fire as well. So, and there's only so many, missiles and sort of equipment to shoot this down. And obviously, even globally, there's a shortage of this sort of equipment just because of the demand that we've had in Ukraine, in Israel, and now in these areas as well. And it was such a potent force as well for Iran to attack those Gulf states, because stability has been sort of the basis of their strength. And you throw that into doubt, you throw those nations into doubt. They're obviously close allies of the Trump administration, so puts pressure on the US as well. So both sides have their cards, and Iran sort of seems to feel quite emboldened here. So, skirmishing, it seems, is likely going to keep continuing there. And
some very difficult choices here for ship owners and insurers as well. What's the state of play with traffic through the Strait?
Yeah, I mean, look, it's been relatively subdued, obviously. We've had examples of India reaching out directly to Iran to see whether it can get some of its ships through, and also to look after some of its seafarers, because some were killed in earlier fighting. There's other examples of ships using the Omani route, this southern route, and turning off their transponders. But at this stage, it sort of seems to be a division of whether ships will keep going or not, and it's a matter of watching, because, as I mentioned, a lot of them are turning off their transponders, so you can't actually see who's going through. But for the US, ideally, I mean, if you can keep traffic going through and keep the oil price from going too high, they can sort of, it does weaken Iran's hand a bit. Whereas if Iran could shut this down, then obviously they really strengthen their position.
Michael Heath there with the latest on the ongoing tensions around Iran. The other dominant macro theme in today's session, of course, is the rotation in tech. We continue to watch the usual names like SK Hynix, Samsung, for example, especially as we've just heard that SK Hynix $28 billion US listing is more than 7 times oversubscribed. Samsung also, it had record profits this week. It will unveil its Galaxy Z Fold 8 later this month. The Korean AI trade, though, facing sort of a valuation reset at the moment. We are seeing the rebound after a few sessions of losses when it comes to these semiconductor names, including memory chip maker Kioxia Holdings, which at one point rallied 8% at the open. Bain Capital just told Bloomberg that it sold its entire stake in Kioxia. Of course, the AI boom has sent Kioxia shares more than 4,000% higher since their 2024 debut. And coming up, the Asian Development Bank says growth in the region is expected to remain subdued despite a modest improvement in the outlook and easing inflation, not to mention that semiconductor upside in exports is helping some economies as well. We'll get the details next with their chief economist, Albert Park. This is Bloomberg. We're seeing broad upside across markets in Asia, especially with a rebound in those tech names. Memory chip makers gaining ground today. We're seeing the Kospi, though, trying to climb back out of that bear market, having fallen about 20% or more since its recent peak. And we're following, of course, the latest when it comes to the economic growth prospects here across Asia as well. The Asian Development Bank saying that growth across the region is expected to remain subdued, despite a modest improvement in outlook as lingering disruptions from the Middle East weigh on supply chains and production costs. Let's get more on the bank's latest report with Chief Economist Albert Park. Albert, always good to have you with us. It's interesting because you downgraded the forecast for growth in the broader region, but when it comes to advanced APAC, you actually upgraded it. Where's the divergence?
Well, one thing that we have observed in the first quarter is very strong export growth in semiconductor AI-related production, and that has really benefited what we used to call the four dragons, Taipei, China, Korea, and Hong Kong, and also it also has helped some of the Southeast Asian economies that have been connected to the semiconductor supply chain, like Malaysia, to some extent, Thailand. And so that has been a positive story, but the Middle East crisis is really the main story for the downgrade for developing Asia and Pacific. In April, our previous forecast had been 5.1% for developing Asia and the Pacific, and now it's 4.9%. And that's really due to the more prolonged nature of the conflict, our concern that lagged effects, kind of the pass-through of higher energy prices to the supply of other goods and services, core inflation. These are all now risks for the region that are going to slow growth somewhat.
When it comes to the impact from the Middle East conflict, it's interesting that at least developing China seems to have been more resilient. Are we seeing even divergence within developing Asia at this point from the crisis in Iran?
I think most of our subregions we are downgrading because of the higher energy prices. As you know, Asia Pacific is particularly reliant on imports of oil, especially, and gas from the Middle East. But China has been somewhat resilient. They had very high oil reserves. They've pretty much protected their economy from severe disruption from the higher energy prices. And so they've also had very good numbers in the first quarter, and a public stance of still accommodative monetary policy and fiscal investment plans that we think will raise growth somewhat in the second half. So that offsets, again, the challenges that everyone faces in terms of the higher energy prices.
Albert, what are you seeing in terms of efforts from some of these developing nations that are very dependent on the energy that flows through the Strait of Hormuz when it comes to building greater energy resilience?
Well, I think countries are trying to respond to the challenge in various ways. Some governments have been trying to protect their consumers and firms by continuing to subsidize oil prices or energy prices. But of course, that really eats up into their fiscal space, and so weakens their resilience kind of in the long term in terms of what they'll be able to do. and raises debt, and it leads to some kind of debt sustainability concerns. But of course, other countries are trying to diversify energy sources. Some countries have announced that they want to shift more quickly to renewable energy sources to reduce dependence on fossil-based fuels because of the concentration risk of sourcing all of the supply from the Middle East.
Do you expect to see AI-driven demand remain a big support for regional growth heading into next year?
That's certainly been an important story for more robust growth, especially in some of the advanced Asian economies. We are overall bullish on the AI movement, but we recognize that there's a lot of volatility. There's certainly some risks of highly volatile equity markets in the AI space. I think broadly, that's what we're going to see going forward, a lot of volatility, but continued investment. And eventually, we should start to see higher productivity growth for economies that start to adopt AI more broadly. Of course, that tends to, again, be concentrated in certain economies, China, India, and advanced economies in the region. And one concern we have is that some of the less developed economies that have fewer capabilities in the digital space are going to find it hard to match this level of adoption. And this could lead to certain divergences in the opportunities that AI is creating for countries in the region.
Right, Albert, I mean, we continue to see the haves and have-nots when it comes to this short-term impact of AI, but broader, longer term, when we talk about labor market and structural changes, what is the time horizon when we can expect this divergence to deepen, or measures that need to be implemented before that happens?
Well, I think we're still in early stages in terms of understanding the true productivity effects of AI. We know in studies of specific firms and sector that it has been raising productivity. We also know that it's been challenging to certain types of jobs. For instance, the business process outsourcing sector in the Philippines I think there's a lot of concerns about whether AI is going to replace employment in this kind of growth sector for the economy. And so I think governments just need to really monitor the situation carefully. I think it will be a gradual process as we see this impacts. ADB right now is really trying to support countries in their digital transformation so that fewer countries and fewer people are left behind in the AI race.
All right, Albert Park, Chief Economist at the Asian Development Bank. Thank you so much for your time today. And we have more ahead on the Asia trade. This is Bloomberg.
The Nikkei is now gaining ground for the first time in 4 sessions. We have the rebound of memory chip makers, semiconductor makers, equipment makers here in Japan. The tech sector seeing a little bit of a boost as the Japanese yen holds at that 162 level against the U.S. dollar. We're watching a couple of earnings results later today, including Seven & i, not to mention fast retailing. But when it comes to the tech sector, as I mentioned, we're seeing the likes of flash memory chip maker Kioxia, for example, jumping after Bain Capital told Bloomberg that it sold its entire stake in the company. The U.S. private equity firm logged record-setting returns on its 8-year-long bet on the memory operations spun out of Toshiba. Managing partner David Gross told us exclusively about the exit from one of Bain Capital's biggest deals.
It was originally, roughly $18 billion transaction back in 2018 when we did the deal, and the market capitalization now is, close to $400 billion. So it is enormous, the largest market cap company in Japan. And as you may remember, that was a very important part of Toshiba when Toshiba was facing some struggles. And so carving that business out, sustaining its R&D capability was critical for Toshiba, was critical for Kioxia, was critical for Japan's participation in this new technology opportunity. And then when AI came along, we had spent a lot of time focusing the product pipeline on the hyperscalers. And that, at the time, there was not AI, but that was really the strategic area. We did a lot to shift resources into that, develop the right products. such that when the AI wave came along, we were in the right place at the right time, and then it was a huge source of growth.
Do you still have around 20% stake? I heard you guys were winding down.
We were winding down, yes.
I mean, given the...
We've wound down.
Yeah,
Yes.
okay.
Yes.
So around how much are we talking about, and how much do you plan to keep?
We don't have a stake anymore in Kioxia.
When it comes to future investments, are you looking at similar areas right now when it comes to Kioxia, equipment, memory in Japan?
Yeah, well, there's only really one big memory company in Japan, but there are a number of businesses that sit around that ecosystem, whether it's the semiconductor equipment that serves that industry, whether it's the energy systems that serve data centers, software and applications is an area where we're quite active. So Kioxia was a really important success story of building a great technology company, but also got us very embedded into the broader new technology infrastructure. And the relationships we gain there, the knowledge we gain there is allowing us to generate some pretty interesting deal opportunities.
I'm surprised that you don't have a stake in Kioxia anymore. I thought you had just wound down.
We have one, yeah, we wound down that stake.
How much has that helped in opening doors across Japan?
Yeah, I mean, I think it's been really important for the industry and for us because, again, this was a crown jewel of one of the top, kind of technology-driven companies and conglomerates with an amazing history, Toshiba. A lot of parties and stakeholders were involved, so there were a lot of eyes on whether this was going to work, and it's worked spectacularly for really, I'd say, all the stakeholders involved. And so clearly it's lended additional credibility to private equity, to the pitch and the promise that we're saying that we can actually we take businesses that may have had some struggles and get them on a growth footing and really position them to be not just leaders in Japan, but global leaders in very critical industries for Japan. And so I think it gives a really big boost.
That's Bain Capital Managing Partner David Gross there, speaking exclusively to Bloomberg. Let's take a look at how EU futures are tracking at the moment. The resumption of hostilities in the Gulf casting a bit of a shadow on things, although Euro Stoxx futures up 0.9%. However, the ECB's Joachim Nagel says another rate hike can't be ruled out as tensions mount in the Middle East. Now, on the left of your screen there, just when you thought the 2020s couldn't get any weirder, that is Count Binface, the sole candidate setting up to oppose Nigel Farage in the upcoming Clacton by-election in the UK. Odds are shortening 4-1 now to defeat Nigel Farage. That is about the same odds as England has of winning the World Cup. More in a moment. This is Bloomberg. Let's take a look at how Asia markets are tracking this Thursday morning. It's very much a risk-on day despite the resumption of hostilities around Iran. We've got the Nikkei better by 1.9% now. Big jump for the Kospi as well, being driven by SK Hynix, up 11.3%. Quite a month for that stock. Samsung also better by 8.4%. Nasdaq futures also ticking higher. Tech, Shery, something of a safe haven in these uncertain geopolitical times.
Yeah, what's been interesting is that even when it comes to these tech names, SpaceX has been trading as an AI infrastructure stock, right? And really that trading debut in the U.S. has led to a lot of volatility, even in Japanese space industry names. You can see right there, Astroscale at the moment gaining a little bit of ground. We do have a positive market in today's session. Most stocks in the green right now with that rebound in tech. But when we saw that SpaceX trading debut, we actually had some investors flipping into this company, so a lot of pressure for these Japanese names. Ispace, for example, rallied about 50% from the beginning of this year to May. It's given up some of those gains, but we are seeing Asian governments right now trying to push this commercial space sector and then join the global space race. Joining us now is Takeshi Hakamada. He's the founder and CEO of lunar exploration company Ispace, which designs and builds lunar landers and rovers. It's really great to have you with us here in the Tokyo studio.
Thank you very much for having me today.
So we have actually seen a little bit of difficulties in your previous lunar landing. So give us an update on where you're at for your mission in 2028.
We are preparing for the next lunar landing mission. launch in 2028. We call Mission 3 using Ultra Lander, unified our lander, and then we're going to deliver up to 200 kilograms payload to the lunar surface this time. But using our experience, lesson learned from Mission 1, Mission 2, and then also we're going to transfer JAXA's lunar landers landing technology into our lander. And then we're going to make sure next landing going to be successful. And then that is currently we are working on.
Does it give you more of a boost and more attention, not only from the government, but from global investors, the fact that we have had this immense SpaceX trading debut?
Sure. So we are working on the lunar transportation, but it's not the beginning. And then thanks to the recent announcement by the NASA's ignition new plan, NASA wants to increase the cadence of the landing on the moon, and essentially they want to build lunar base. So there is a potential big demand for the lunar transportation and then lunar business, and then that is what we want to capture in near future.
And the latest that we heard this week, your new lunar transportation service will be launching using the payload space of Starship. Give us an update.
Sure. We have Ultra Lander by ourselves. However, we are now contracting with SpaceX using Starship opportunity. And the Starship is a big-sized transportation to the lunar surface. And then we're going to buy 500 kilograms of their payload space. And then we're going to access to the smaller payload customers, like 50 kilograms or the several hundred kilograms payload, and then integrate that payload to our mobile cargo system, and then transport to the moon. And then after the landing, we're going to support the deployment or the transportation to the other area, and then support the operation.
Collaboration with U.S. firms is not that difficult, especially if you have the backing of the governments of both sides. But when it comes to space, it seems now that we're reaching this sort of strategic sector narrative where national security could be involved. Does that affect you?
Yes. Speaking of the national security, our current major interest is how to protect the satellite or the space system around the Earth. However, we are entering the era, we are going to the moon, and the many satellites or the spacecraft going to be cruising between the Earth and the moon. And we maybe need to prepare for the threat from the outside the the Earth orbit.
What are the critical components in trying to really be more defensive when it comes to national security capabilities in space?
Yeah, this is going to be not kind of defensive side of the technology required, but first thing to do is to monitor what kind of the spacecraft is cruising in the deeper space, and then analyze whether it's going to become the future threat or not.
How closely are you working with the Japanese government?
Well, we are working closely with Japanese government. We have two significant support from the government. The one is funding. We are awarded SBIR program and then Space Strategic Fund as well. And then also we have support for the technology transfer. As I mentioned earlier, we have a transfer of the JAXA SLIM's lunar landers landing technology to our commercial lander.
When we think about Japan, we think about its manufacturing prowess, engineering prowess as well. How advanced is this country when it comes to global commercial space race?
Well, people think that Japan has great industry base. That's true. However, in terms of space industry, still the people is limited, talent is limited. So, for example, our company, Ispace, is hiring many great talent from all the world, not only in Japan. And then even in Japan office, we have about half are non-Japanese. So we are trying to utilize Japanese capability and also international capability combined.
Is there enough government support, especially when it comes to immigration, visa applications, bringing the talent from abroad? And what else does the government need to do on top of just funding?
Well, we are very happy the current situation, already we have many international people inviting to Japan, and then so we are very grateful. Government is open the door for that initiative.
And what about education and building up the pipeline of talent?
Well, so we are working on the lunar business right now. However, we need to educate next generation. They are the person who's going to work on the moon or in space in the future. So we encourage the more younger generation interest to our business.
Takeshi Hakamada, really good to have you with us. Thank you so much for joining us here in the Tokyo studio. He's the founder and CEO of Ispace. And of course, you can get more on the trends, these broad stories, and also about the people shaping Japan. Do subscribe to my monthly newsletter, Tokyo Dispatch. It's taking a closer look at the forces driving change across the country. And you can sign up at bloomberg.com/newsletters.
Right, let's take a look at some of the movers in the early going this Thursday in the Asia-Pacific. Unsurprisingly, it's the energy sector that's doing pretty well after we saw Brent briefly topping $80 a barrel on those renewed tensions in the Middle East. Brent right now 78.79, but Woodside Energy better by more than 1.5% here in Australia. S-Oil and Impex also having a good day in South Korea and Japan respectively. Energy, the best performing sector by far at the moment on the ASX. We have more ahead on the Asia trade. This is Bloomberg. We're going to be watching Chinese tech stocks after Wednesday's big rally, which was driven by rotation flows out of semiconductors. That said, the HS Tech Index a little bit softer there by 1/3%. But the broader strength is coming as Hong Kong digests a wave of tech capital raising. For more on this, let's get back to markets reporter Anthony Stevens. So, Anthony's rotation into Chinese tech take a bit of a pause today as the semi-rally restarts.
Yeah, it's a strong start to tech in Korea and Japan, and that probably does cap the enthusiasm for Chinese markets just for today. You did see the ADRs in the US and futures indications, as you just highlighted, not doing very much. It's flattish. It's not the worst reaction to this escalation in tensions in Iran, but definitely Hong Kong, China to start is not going to be the focus. There are some headlines from local media about an improved picture for the retail industry, especially competition between the online and offline markets. That's going to be very important to pass as the day goes by, because this has been a sector that has lagged very badly in China. Retail sales are quite low and they have been drifting lower, and that's been impacting shares of JD, Meituan, Baba and the like. And any relief in that sector could see a new leg higher for the Chinese tech sector on the internet space. Now, in terms of the LLM side of things, on the AI front, we do have reporting of a new model from Minimax that joins new models from Tencent and Meituan recently. So we do have this momentum on the technology innovation side in China as well. And as you guys have touched on, there are these headlines around China allowing incrementally more Nvidia chips into China. So it's interesting from a technology perspective. There is some positive impetus as well.
And not to mention, as Paul alluded to, that Hong Kong is adjusting this wave of tech capital raisings. Can the markets handle this?
So far, the indications are quite promising. These deals are being priced very tight versus the average daily volume of these stocks. So a lot of the stocks that are coming to market are, high technology, high beta names that move around 5 to 10% a day. And these deals are coming at around 10%. So that is an extremely tight pricing. And early indications are that they are trading reasonably well. So, for example, Byron came earlier in the week. That was priced down around 10%, and that's traded really well. It's up around 8% going into Wednesday. So in terms of appetite and post-deal performance, ECM in Hong Kong has been very strong. Now we do have a bunch of these secondary listings coming over from China, Luxshare being the most important one, and then CXMT later. So how those trade is also going to be an interesting little insight into how overseas and foreign investors take the Chinese tech sector.
All right, Bloomberg Markets reporter Anthony Stevens there. Well, Apple supplier Luxshare is set to begin trading in Hong Kong next hour after raising $3.1 billion in the city's biggest listing this year so far. Let's get to our China correspondent Min Min Lo in Hong Kong. So Min Min, how much interest is there in this listing?
Yes, Paul, there is a fair amount of interest. You look at the retail portion, it's about more than 3.5 times oversubscribed. It's about 9 times oversubscribed in the international portion. But then if you look at the grey market trading, the stock was down as much as 12%. It could be a matter of pricing. It's priced at the highest end of its range, but still at about a 12% discount from yesterday's close. So this is a company that is well known for supplying to Apple, right? It makes those hard shells for your iPad and MacBook. It supplies components for iPhones and AirPods. But one of the vulnerabilities of this company is that it derives so much, in fact, about 80% or more of its revenue from Apple last year. So the company is trying to diversify its client base to enter into emerging industries like low-altitude economy, AI devices. The company has said it's going to use those IPO proceeds to go into automotive component manufacturing, to supply components to intelligent vehicles, to upgrade its factories to create some smart manufacturing systems. And yes, this is the largest IPO in Hong Kong, and it's going to contribute to that very strong pipeline we have seen in Hong Kong this year. The share sales in the first half of this year so far is already at about a 5-year high.
Let's talk about Zhipu as well, looking to raise funds again. It's only been a year, even less than that, after it listed in Hong Kong. What's it going to use the money for?
Yes, this is a $4 billion share sale, so a huge one. In fact, probably the largest that we had seen since CATL issued this $5 billion share sale back in April, also about a year after its listing. Zhipu, of course, there has been so much interest in this stock since the listing in January, right? It soared by 1,500%. But here you can see, if you look at the 2-day, it's been pretty volatile. It went down about, I think, 8-9% before shooting up another 19% over the last couple of days. A part of the reason was the concern that the lockup period for some of the cornerstone investors' shares yesterday had expired, but those investors did not dump the shares, so that's why we saw Zhipu recover after that. But one of the reasons there's so much volatility is because the freely circulating portion of the shares is less than 10% of the total shares issued, and even with this second round of share sale, it's still going to be less than 10%. So the next sort of milestone to look for is next January, when you have about 40% of the shares seeing their lockup period expire as well, and that could continue to be an overhang for Zhipu.
Bloomberg China correspondent Min Min Lo there. And we stay with some of those Chinese tech names. Chinese chipmaker CXMT also opening its IPO subscription on the STAR market on July 16th. According to a prospectus filed with the Shanghai Stock Exchange, the plan is to issue nearly 6.7 billion shares with a preliminary price inquiry on July 13th. China's homegrown chip makers have drawn fervent investor interest due to an unprecedented memory shortage driven by demand from hyperscalers. The Information reports that China is planning to allow some of its top AI companies to buy a limited amount of Nvidia's H200 chips. Chinese officials are said to have told Alibaba, ByteDance, and DeepSeek that they need to say how many chips they need and why to get approval. Nvidia shares climbed in New York, but the stock is now the cheapest it's been since before the AI boom began, losing $1 trillion market value in less than 2 months. SpaceX AI has unveiled its latest artificial intelligence model, Grok 4.5, built in partnership with coding startup Cursor. According to a company blog post, the new model is aimed at tackling a wider mix of tasks such as legal and financial services and will have increased cybersecurity capabilities. SpaceX AI was formed after Musk's rocket company absorbed xAI in a bid to compete with major players like OpenAI and Anthropic. The new model comes weeks after SpaceX formally agreed to acquire Cursor in a deal that valued the startup at $60 billion. Bloomberg sources say SK Hynix's U.S. listing is more than 7 times oversubscribed. We're told the ADR sale has attracted demand from institutional investors, including global long-only funds and sovereign wealth funds. Bloomberg calculations show the offering could raise more than $24 billion, ranking it among the largest ever U.S. debuts for a foreign company. Take a look at SK Hynix because it's rebounding right now after 3 sessions of losses. Similar story for Samsung as well, gaining ground for the first time in 4 sessions after the record profit earlier in the week. Disappointed investors. We do have their products unveilings later this month to watch out for as well. Do look at Tokyo Electron gaining about 5% right now. We've heard from the likes of domestic media Nikkei that the equipment maker will cut chip gear delivery times by half. Also, Kioxia rallying almost 10%. Bloomberg now being told by Bain Capital that it sold its entire stake in the company after it rallied more than 4,000% since their 2024 debut. This is Bloomberg. We continue to see gains in oil prices right now, with both Brent and WTI very close to that $80 level. We actually saw Brent surpassing that level at one point. We're seeing the recouping of those losses that we saw in oil prices earlier in the second quarter. It had sank about 30%, but the geopolitical risk premium back in the markets now, with President Trump saying that the ceasefire with Iran is over. The U.S. continues to attack Iran right now, targeting sites linked to threats against shipping. So we continue to watch what's happening in the Strait of Hormuz. As the ASX 200 is down 0.8%, we have seen, of course, a rally when it came to those energy producers in the Australian session. Not surprising given right now the movement in oil prices. We continue to watch what ship owners are saying when it comes to those vessels transiting the waterway. Traffic remains pretty concentrated right now on the Omani corridor. We have seen that really spike in energy prices being felt in European gas, especially. We're also watching the AI trend dominant across markets. Singapore state-owned investor Temasek ramping up its exposure to artificial intelligence and the Americas as well. CIO Rohit Sipahimalani telling us that segments of the AI trade look frothy, but they expect earnings-driven growth to continue near term.
Typically, capex-driven growth cycles are very good for earnings because the people who are recipients of that spend, they take 100% of that spend as revenue. The people who are spending, they account only for the depreciation cost right now. So as a whole, it's actually very good for the earnings thing. Now, at some point, this acceleration capex cannot continue indefinitely, and that's why you will have cycles. But at least in the near future, we don't see that changing materially. So it's right now, I would say, a very earnings-driven market. There's segments of the market that are frothy, but the segment I mentioned, the hyperscaler, they're trading at about the lowest multiples that you've seen in the last few years.
What's looking frothy?
When you're playing in the frothy areas, A, you got to be confident that that's an area of hyper growth. But secondly, you got to be sufficiently diversified in some of these, and that's why we're doing that through the VCs. You know, in the public markets, like I said, I mean, it changes day by day. I mean, the question is, are the, is semiconductors frothy? Now, if you look at Nvidia, it's trading at 13 times 27 earnings. You know, is that frothy? I mean, I don't think so. But there may be other companies who are. So I think you've got to look at it company by company. And a lot of it actually depends on your assumption.
But traditional benchmarks are no longer relevant right now, right? Because AI is an area that few people really understand.
Yeah, but as I said, if you look at the ecosystem as a whole, it is generating $500 billion of free cash flow. So yes, you can play in areas which are uncertain, but there's enough of the ecosystem that you can invest in, which is still strong cash flow generating, and you can look at it from a traditional metrics.
And when you take a look at the US market, valuations are at record highs, very stretched, driven pretty much by tech and AI. How do you justify mobilizing your capital without, putting yourself at risk if that AI capex bubble were to pop?
So, Cylinder, what's interesting is that the entire rise in the market this year, and let's take the US for example, has been all earnings driven. In fact, multiples today are lower than what they were at the beginning of the year. Beginning of the year, they're closer to 22 times. They're probably 20.5 times right now. So actually, multiples have come down. But the US is looking at earnings growth of over 20% this year. It's not just the AI. The S&P equal weight index is expecting earnings to grow at 17% this year. And it's not just the US. Across the world, whether it's the US, Europe, Japan, or EM as a whole, every market is expecting double-digit earnings growth this year and in 27 and in 28.
Temasek International CIO Rohit Sipahimalani speaking to Bloomberg Insight anchor Hasinda Amin, and in fact, launching today Bloomberg's new series Emerging, exploring the many forces reshaping the world's fastest rising economies, from geopolitics to AI. Hosts Emena Kadoshi and Hasinda lead insightful conversations on the risks and opportunities. Watch on YouTube or listen on Bloomberg Podcasts, Apple Podcasts, and Spotify, available now across platforms. The markets broadly across Asia seeing some upside, with tech leading those gains, not to mention the energy trade on rising oil prices. That's it from the Asia trade. The China show is next. This is Bloomberg.